Hey guys, Jason here doing another TA walkthrough video. We're going to look at CGC, and I'm also going to include an example from BNGO that we covered live during the live stream today. So the energy is going to be a little bit different than the live video. But I wanted to show you how real-time analysis can benefit you as we watch patterns actually play out in real time. So you're able to, well, actually what happened was someone asked me about BNGO during the live call, did a quick assessment on it. We noticed a pattern in play, and we saw it play out almost perfectly. So check that out. That'll be first. After that, we will go and look at CGC and check it out. Bingo on the daily time frame. Wild daily chart. Don't like it at all. Real lack of clarity and direction here. Volatility abound. 4-hour time frame, trying to change a 4-hour trend. If we've done that, we have now hit higher highs, but we need to hit higher lows. This is not going to be a confirmation of a higher low. So let's go to the hourly time frame and see what's going on. Someone would make an argument for a bull flag, but I don't see a bull flag. I do see, however, an hourly uptrend. Now, if bulls can close this strong, then we have a good chance of maintaining hourly higher lows with a current low at 523. So what we'd have to do is go to the 5-minute time frame and watch this 5-minute trend. We're going to be looking for 5-minute higher lows to back up that hourly higher low and give us that green close. And on the 2-minute time frame, we got ourselves a little bit of a bull flag situation forming up, because I can see that on the 5. So what I could do is try to draw this little masterpiece, give myself a little bit of a channel. We have confirmed area of resistance here. Bull's going to want to, well, basically get over top of 575, and then that's our signal. So we should see bull volume pouring in pretty quick. We got ourselves a nice stop loss level right at the low of consolidation. I would probably put my stop right under 566, so 555. And then what we want to do is see the bulls above this level. Oh, 579. Let's see how close we got to that guy. Yeah. So we want to see, it's good volume coming in right now. We do have another, perfect. We broke that resistance. The further we break to the upside, the more likely our higher low over this area consolidation is going to be. So a couple of things are going to happen right now. We've broken we've broken out of the fuzzy cloud of resistance. Now what needs to happen is the bulls need to prove that they are interested in continuation and they're happy with the validation that's going to occur with volume. If there is zero volume up here, that means we're just going to fall right back into that range and test it first. And then the volume doesn't back up that move, we're going to see continuation to the downside and retest at 566. So it'll be a failed breakout. But if we do see volume continue here, that's going to support what the bulls are doing. And right now I am seeing pretty good volume. We want to support the move above 575 and get that 2-minute bull flag and just see how far she can go. That's nice volume. So there's that little hesitation. We always get that moment. I should say always. But we always have our initial break, and then we pull back a little bit. And that's where the magic can happen. That's where I like to get my more conservative entries on a break. Initial profit taking from the horde of day traders like us. Get in my low, higher low, and then continue. So 587, where are we going to go with this? Hopefully this is helpful. Good timing overall. $6 psychological. I'll go back to my 15 minutes. Yeah, that would be my target. And if we're looking at a flag, what are our rules for flags? Oh, let's go back over here. We're going to go back to the 2-minute time frame. I'm going to say this is my range from the low to the high. Let's peel that back. Copy paste it. That works out pretty much to 6, doesn't it? Oh, let's go down a little bit. That should be the target for our phase 3 of our flag, which coincides perfectly with our 6 psychological resistance. Let's take a look at our bingo friend. 595 before pulling back a little bit. That's not bad. And that's a 15-second time frame. So it's a what? 2-minute higher low. Exactly what we want to see. So this is where we start walking up our stops. This should be your stop at this point. And I would likely be taking profit already, or at least chopping. We're so close to my goal that I would be happy with that. I want to check our little friend. Oh, we got so close. We got so close to 6. That was nice. Think I'm gonna do a video on these guys later. Alright guys, let's take a look at some action on CGC. In my last video, I covered some of the action that occurred on January 6th, and that was pretty interesting because we had a couple of really strong ranges, and then we were looking for a classic CGC play, which is a quick 2-minute, 5-minute oversold bounce in the morning. And in that particular day, we managed to catch 1 and 2 of those types of bounces. So when we were looking on January 7th, we were looking for something similar to occur. 5-minute time frame, we opened pretty strong for the bears. We pushed down into 5-minute oversold, immediately bought up, setting the range from 30.96 to 32.30. That was the quick range. And what was interesting, what I want to talk about, occurred in the action that followed that as we dropped from the high down to 31.18. Now we need to go to the daily time frame to get some context for this because it really explains what we were looking at. So here's that big day, big gap up. Now we're looking for some sort of weakness. We know we're overextended. So the bulls have had an opportunity to push to the upside. Now we're going to look for the bears to lean in a little bit and take advantage of some of these tired bulls. And that's what I should have been paying attention to because yes, I did get on the wrong side of this particular trade. So let's check it out again on the 5-minute time frame. So we had started our day, as I said, 32.30. 31.18. Now I'm looking for some sort of sign that we're going to be getting a 5-minute higher low over the low of day. That is the expectation and is a standard course because low of day and high of day are the only resistances that we have from that day's trading so far. So historically, proven to be pretty reliable. Given the range here, we're looking for a 5-minute higher low. 31.18 looks to be set. We roll in, then we start paying attention to the 2-minute time frame in this area. So let's go circle that. And let's zoom in. So here's our little area of congestion. We're looking for that 5-minute higher low. We get a 2-minute low, we get a 2-minute higher low, and then we start to grind up against this area of resistance. And I'm looking at this tightening range and I'm waiting for a bull break. This bull break is going to be my signal for entry. Why? Because we've set that higher low. We set 2-minute higher lows, and now we're going to look for 2-minute higher highs to correct the trend and give the bias back to the bulls for another test at possibly a higher high over 32.30. We saw this sort of thing happen on the previous day's action. Let's go way back over here. Here's that bounce, nice solid fall through 2-minute higher highs, higher lows, all the way up to near high a day test. That's what we're looking to replicate. So we get into this situation. We have our initial ranges. We see higher lows, higher highs in the 2-minute time frame, grinding this 31.55 area of resistance. We get really, really tight. Finally, we get a bull break. So I get a market buy at 31.55's break. A little bit of slippage there, of course, and then we get all the way up to 31.79. At that point, I'm looking for a 2-minute higher low. We come back down, test 31.55, have a minor little bounce, and then a break. I got out, small loss, and thank goodness I did have that stop loss because the duration of the day really went much more significantly bearish than I anticipated. So really, it was a lack of follow-through on the part of the bulls that resulted in that fade. Remember, we're looking on the daily time frame. We're expecting some bearish lean. The bulls are in overextended position, and bears have an opportunity to apply some pressure and push things to the downside. They certainly did that. So what were our red flags in this particular trade setup? This is something that I want you guys to carry with you as you're watching for congestion breakouts or pattern breakouts like this. Let's take a look at what sort of action we saw as far as volume goes. Look here. As we get into this tightening range, we start to see volume taper off. But what we don't see is a big increase in volume upon the break over top of a key resistance. So bulls are interested, sure, they're driving the price up, but not enough bulls are here to really get things moving. In fact, we run out of steam because the lack of participation in this bull move shows that hyperextension. It shows the lack of follow-through potential. And this is where the bulls and bears are able to see a change of course and have bears push the price back down. So what we need to examine is the amount of volume and shares traded at individual levels. So the real key here is using the volume profile and taking a look at the action that occurred between our congestion and our point over the break. So at this point, we can see that there is considerably more volume being traded in this little area. Let's even zoom in a little bit more. Notice how there's significantly more volume being traded underneath that area of resistance as opposed to being on top of it. So there's less validation. And that fall off in volume should have been a red flag that this breakout wasn't going to have the staying power that we would want to see. So pretty interesting in that regard. So now after setting highs, lows, lower highs, and lower lows, we develop ourselves an overall downtrend that doesn't really get corrected for most of the day. In fact, we hit lower lows, you get a double top of 3102. We hit a lower low, 3056. We make an attempt to get to higher highs, but you know what? We just don't do it. We collapse all the way down to 2934 before opening up into a little bit of volatility to cap off the day. Overall, pretty interesting setup. I just wanted to share that little learning tidbit with you. Something that I learned and relearn, and that is the beautiful part about technical analysis, is that we are constantly learning from our peers, learning from each other, learning from ourselves and the mistakes that we make. And that was one that I've relearned my lesson on. Using volume, verifying breakouts with volume, checking volume profile to confirm that the market agrees with your sentiment and they are willing to cast their votes in favor of a bull break in this case. Anyway, that's it. More videos like this hopefully coming up over the next couple of weeks. Thanks for watching. If you have any feedback, I'm always open. If you have any questions about technical analysis, feel free to ask in the comments. And if you want to learn more stuff about TA and charting and being able to interpret, check out TheChartGuys.com.